Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlet Fu. We're counting you down to the closing bell. We're here to help take us beyond the bell. It's a global simulcast where we're joined right now by the Queen, Carol Massar, and her loyal subject, Tim Stenovec. Welcome to our audiences across
sidekick.
All of our Bloomberg platforms.
Wait. Are you the court jester?
Okay. You walked right into that one, Romaine.
Oh, you know.
Thank you for that gift.
I thought it was like Sir Galahad or something.
Good night, dreams. No, only kidding.
No, you're not kidding. But I mean, let's talk about the markets here, Carol Massar.
Yeah,
I don't know if you actually pay attention to what goes on in the markets, if your terminal actually works here. But this is an interesting flip-flop that we've been seeing in the markets. Remember, yesterday it was all about the outperformance of the Russell 2000 relative to the broader market. Today, the opposite.
Well, some nervousness, right? Maybe a little bit overdone in terms of our expectations when it comes to
was
rates.
Sir Galahad good? I just threw that name out there. That was the only nice I could think of.
It doesn't matter.
Yeah. Okay.
Sounds good.
It's going to turn out he's evil or something.
Hey, you know what's not so good, though? With this environment, I was looking at the banks, the KBW Bank Index, down about 1.1%. KeyCorp coming out. There's a Goldman Sachs U.S. Financial Services Conference, CEO making some comments, but also the company coming out and saying that it sees its fourth quarter non-interest income down about 5 to 8% compared with the third quarter. They'd had a prior forecast of up 1.3%. But, you know, the CEO also saying a soft landing isn't a fait accompli, talking about tailwinds from capital markets and net interest income, clients being worried about inflation, soft landing, staff and pay. So I just think, you know, again, never a straight line, whether it's up or down, guys.
It does seem like the bond market, though, Romaine, is telling us that there is going to be a soft landing, at least today.
Yeah, well, at least that's what's being priced in. That may be wishful thinking. Maybe they turn out to be right. This has really been the debate, if you think about it, guys, over the last year and a half or so, is who really has this right, the equity markets or the bond markets. As for the equity markets today, a little bit of red on the screen with the Dow Jones Industrial Average down by about 0.2%, or about 79 points. The S&P 500 down by about 3 points, or just about 0.1%, a little less than 0.1% to be precise about it, while the NASDAQ Composite higher on the day by 0.3%. But flip it up. Let's take a look at the Russell 2000, because it gave back all of the gains from yesterday. It had rallied 1% yesterday, down 1.4% today. But, of course, it had been on a 4-day win streak, so still holding on to some of the gains from that 4-day stretch.
Yeah, a lot of names to the downside, if you will. Taking a look at the big caps, the S&P 500, about 412 names to the downside, 89 higher. You mentioned the Russell, Romaine, and we've got about 1,500 names, 1,516 names to the downside, and Scarlet, we've got about 414 to the upside. So you really see that risk-off trade today.
Yeah, and let's take a look at how the sectors have performed on the day. 24 industry groups, 7 of them gained, leading with telecoms, and that's AT&T and Verizon. Tech hardware also doing better, up 1.6%, and Tesla lifting the auto stocks up 0.9%. To the downside, you've got a lot of consumer staples, or I should say household products companies like Procter & Gamble, like Kimberly-Clark, leading the household and personal products sub-index lower, energy stocks falling with oil prices, and materials also weaker.
You know, interesting in this day where it was kind of a meh day to some extent. We really watched again yields backing off, but you had a lot of those big cap tech names. NVIDIA, Apple, Amazon are all top in the NASDAQ 100 today. So I'm going to bring you to Apple, just finishing off its highs of this session, still with about a 2% gain. So outperforming the broader market, following a strong forecast from the iPhone assembler, Hanhai Precision Industries, Citi writing that this news is positive for Apple, which contributes about 50% of that company's revenue. So Apple definitely popping in today's trade.
And we should point out, too, that market cap back to $3 trillion. You remember it crossed the $3 trillion mark. I think it was back in late June, early July, and then, of course, gave that back now, back above $3 trillion.
Yeah, exactly. Really good point. NVIDIA, I mentioned, also top in the NASDAQ 100. It's up in today's trade as well, up about 2.3%. In terms of news, we did have a story out on the Bloomberg about plans to build an AI tech-related ecosystem in Japan to meet demand in that country, which is eager to also gain an edge in artificial intelligence. So NVIDIA, though, definitely to the upside. Alaska Air, remember, they were killed in yesterday's session following news that they were looking to buy and had a deal to buy Hawaiian Airlines. Investors concerned about the regulatory oversight and antitrust scrutiny that the deal would not get done. Well, today, our story about the company's CEO, Alaska Air CEO, based on people familiar with the matter, basically saying that he's ready to engage in a street fight if required to basically get this thing done. So we saw investors kicking that stock up higher, about 4.3%. And then one more, Market Access Holdings. It was top in the S&P 500, institutional and broker-dealer platform. Company's November monthly metrics included total credit average daily trading volume that rose month over month to 14.3 billion. So we saw investors moving into that big time, up more than 5%.
Okay, I came armed with 4 decliners today because I didn't want to feel like I was an underachiever. But I'll go through them really quickly here. Starting with Charter Communications, the worst performer on a percentage basis in the S&P 500, down 8.7%. It did fall as much as 10% earlier in the session. The CFO, speaking at a global media and communications conference for UBS, saying that there are short-term challenges in broadband, though she thinks that long-term broadband continue to grow really well. There are some concerns about competition from actually like 5G and wireless networks as well. Procter & Gamble shares the worst performer on a points basis in the S&P 500, falling 3.5%, actually the most since July of last year. The company came out and said it would restructure and impair. They would have $2 to $2.5 billion of restructuring and impairment charges, and also talked a little bit about some weakness in China and in South America.
And they also cited, I thought this was funny, working from home.
Yeah.
That was actually cutting their business, I guess, because we're grooming ourselves less.
You don't need to shave as much if
well,
you're not going into the
great
office.
headline story on the Bloomberg terminal right now is that Procter & Gamble is looking to head shaving to jumpstart its Gillette segment.
Interesting. Okay, so they also took a $1.3 billion non-cash impairment charge on intangible assets acquired as part of the 2005 acquisition of Gillette.
Wait, so is The Rock going to be their spokesperson?
Do you remember when they talked a few years ago about how people growing beards was impacting Gillette's business because beards were cool again?
Yeah.
Yeah. So
I guess
It's a $45 head shaving kit.
Yeah, it's like a whole kit.
Well,
Yeah.
you see
Primer,
I mean,
a lotion for shine control.
To be fair, I mean, that's pretty much how much 5 blades from Gillette
But that was
cost,
like when everyone grew a beard. All of a sudden, like, beard oil became a thing. And it's like, do you really need beard oil? Like what?
All right, I'm being told I have to talk about airlines right now. Let's go to Spirit Airlines, finishing the day lower.
We were having a great conversation about beards.
We
and
were,
bald heads.
lower by 12.2% on the day. This after the federal trial to block its merger with JetBlue is coming to a close. We should note the Department of Justice does claim the merger would give JetBlue unfair market power because it competes in some of the same markets as Spirit. I'm wondering what this combined company looks like post merger if this goes through, because JetBlue and Spirit certainly do have different cultures. We've talked about that in the past. An honorable mention for Starbucks here, down for a 12th day in a row, the longest losing streak ever.
Dishonorable mention at this point.
Yeah, that's a good point. Down more than 2% today. Still concerns over slowing sales.
Yeah, the CEO has called the recovery in China slower than expected, half the pace than what you would think it would be.
Is that why it's down so much?
That doesn't explain the 12-day route, but it explains why it fell today.
Yeah, something's clearly going on under the hood there.
Yeah.
And it's just going to be some time before we actually find out. There's some earnings crossing the wire, but real quickly, let's just get to what happened in the yield space, because we did see a bit of a flip-flop. We should point out, the last 5 days, this is basically how it's been. You get a rally one day, and then the next day a sell-off, and then rinse and repeat. And that's basically what happened over the last 2 days. Today, of course, it was a resumption of the rally here. Then that did push yields down about 5 basis points on the shorter end of the curve, but most of the activity on the longer end of the curve, Scarlet. 8 basis points on the 10-year, 11 basis points on the 20 and 30.
Yeah, but even with that jagged action for the 10-year yield, it's making lower lows along the way down. So it's kind of a step-ladder fashion, but it's going down each time, and we're at a 3-month low, as you mentioned, for the 10-year yield. We've got MongoDB earnings, right?
Yeah, let's get right to it. A MongoDB moving lower here in after-hours trading, down about 5%. This is another software company, Scarlet. As you were saying, there's a lot of them out there that we always tend to forget here. In the third quarter, it does look like they beat on several key metrics. Revenue came in above estimates, $433 million to be precise here. Their loss per share was smaller than expected at 41 cents here. But here's the guidance, and maybe this is the issue here. The guidance, 165 to 166 for full-year revenue. That's 1.65 billion to 1.66. That's really just a nudge above what the street was looking for here. And their adjusted EPS number, though, looks like it's also significantly higher than what the street was looking for. But I guess I don't know. Maybe folks just wanted a little bit more.
I mean, the stock's up 120% this
There
year.
you go.
You're looking at a forward-looking PE of 184. So, like, you have to just really, I feel like, outperform when you give these results for investors to continue to pay up.
Yeah, the company, not surprisingly, calling out the success of specific products in the press release, saying the general availability of release of MongoDB vector search is just the latest example of the strength of our innovation flywheel, and then goes on to cite some work that it's doing when it comes to AI workloads.
I wonder, though, if there is a broader issue here, though, with software companies, and we don't have time to go into it, but Box also reporting those shares down. And we've heard from some of these other application enterprise software companies that billings growth that everyone had sort of relied on to justify these valuations just isn't there anymore.
We actually have Crawford Del Pratt from IDC coming in a little later, and IDC has a 2024 IT report where they're looking at where companies are going to be spending their money next year, and that's certainly something we plan to ask him about.
I just want you to know that P&G bald kit, apparently the new brand promises to liberate men from the stigma around going bald and give balding men the confidence to take back control and proudly own their baldness.
I love the fact that someone came up with that. That's
an MBA.
There were a lot of meetings.
An MBA
meetings
relocated to Cincinnati and probably makes good money.
Guys, that's a wrap. On that note, we'll see you tomorrow. That's a wrap. Our cross-platform coverage, radio, TV, YouTube, Bloomberg Originals. We'll see you all. The gang will be here tomorrow.